Get ready to dive deep into today's buzzing tech stock world with our Friday edition of the Tech Stocks Daily podcast. Apple defies expectations with a strategic pivot, displaying resilience amidst iPhone sale dips and making bold moves in AI and stock buybacks. Google stands its ground in an antitrust clash while pushing tech boundaries with Chrome OS updates. Meanwhile, MicroStrategy doubles down on Bitcoin's blockchain for digital identity, and Block impresses with a stellar first quarter, betting big on Bitcoin and fintech innovations. Today, we break down these narratives, explore the implications for the tech giants on NASDAQ, and tease out what these developments could mean for investors and the future of technology. Strap in for a riveting journey through the highlights and shadows of today's tech stock landscape. In today's tech landscape, Apple Inc. finds itself at the epicenter of market-moving news following its latest earnings report, which unveiled a complex tapestry of success, challenge, and strategic pivots. The Cupertino-based Titan reported its fiscal second quarter results, surpassing muted expectations amidst a declining trend in iPhone sales. Against the backdrop of a global tech slowdown, Apple's report card painted a picture of resilience and calculated optimism. Apple's fiscal narrative was peppered with notable highlights, including a revenue surpassing the street's forecasts at $90.8 billion, down 4% year over year, but still edging past the estimated $90 billion. This marginal decline in revenue was skewed by a sluggish smartphone market, particularly pronounced in China. iPhone sales, the cornerstone of Apple's revenue machine, saw a 10% slide to $45.96 billion. However, this decline was tempered by the robust performance of its services segment, which soared to an all-time high of $23.9 billion, up 14.2% year over year. This diverse mix of performance indicators underscores the changing dynamics within Apple's portfolio, where services are increasingly becoming a critical revenue pillar, offsetting the volatility in hardware sales. Amidst the revenue and sales discourse, Apple made headlines with its ambitious capital return program. The tech behemoth announced a $110 billion buyback plan, alongside a 4% increase in its quarterly dividend, sending a loud message of confidence to its investors. This fiscal maneuver is not just about rewarding shareholders, but also an assertion of Apple's financial health and its belief in the intrinsic value of its stocks. As Apple navigates the choppy waters of global tech demand, its strategic focus seems to be pivoting towards the burgeoning field of artificial intelligence. CEO Tim Cook hinted at substantial investments and upcoming revelations in the AI domain, signaling a strategic shift to align with the next wave of tech innovation. This pivot is critical as Apple trails competitors in integrating AI into its suite of products and services, a gap it's keen to close. Apple's earnings narrative was further enriched by insights into its future directions, amid growing concerns over its performance in the Chinese market and competitiveness against rising challengers like Huawei. The tech giant is not just defending its turf, but is also laying down the gauntlet in the AI arena, with the potential to catalyze a new supercycle of growth with its forthcoming iPhone models and services. In conclusion, Apple's latest earnings snapshot is a multifaceted tale of resilience, strategic recalibration, and forward-looking optimism. The tech giant remains a bellwether for the industry, navigating market dynamics with a blend of innovation, financial prudence, and strategic shifts towards next-gen tech horizons. As Apple steers through the currents of global tech demand, its moves are closely watched, signaling pathways not just for the company, but setting trends for the broader tech ecosystem. Today, Google found itself at the center of multiple headlines, reflecting the diverse and complex landscape it navigates as a tech giant. From antitrust lawsuits to significant updates on its products and speculation about its future financial performance, the narratives surrounding Google are as multifaceted as the company itself. At the heart of today's news was the culmination of a high-stakes antitrust lawsuit, where the U.S. Department of Justice and a coalition of states have targeted Google's dominant position in the search engine market. Accused of spending over $20 billion annually to secure its place as the default search engine on multiple devices, Google stands at a critical junction. The government's case suggests that such practices have stifled competition, leveraging Google's monopoly to maintain a stranglehold on the market, and potentially, to manipulate ad pricing to its advantage. Google's defense points to the superiority of its service as the reason for its dominance, arguing that its contracts with companies like Apple are a testament to this quality, rather than evidence of anti-competitive behavior. Meanwhile, Google's relentless innovation continues unabated, as showcased by the rollout of Chrome OS M124. This update promises a more intuitive user experience and enhanced performance for Chromebooks, aligning with Google's commitment to leveraging technology to improve everyday life. The introduction of features such as a redesigned settings app, faster split-screen setup, and better connectivity management underlines Google's focus on refining its ecosystem for users and developers alike. Financial analysts are buzzing about Alphabet, Google's parent company, with predictions that its stock could reach the $200 mark. This optimism is rooted in Google's impressive growth across its diverse business segments, including Google Search, YouTube, and Google Cloud. Alphabet's strategic investments in AI and a cost-cutting campaign that has bolstered its operating income underpin these forecasts. Moreover, Alphabet's decision to initiate dividend payments marks a new chapter for the company, spotlighting its financial health and potential for future growth. In a nod to user privacy and personal preferences, Google is also testing a new feature in Google Photos designed to mitigate the discomfort of unwanted memories resurfacing. This show less function, though still under development, reflects a thoughtful approach to user experience, recognizing the emotional dimensions of digital content. Lastly, Google's ongoing antitrust battle with Epic Games over App Store policies underscores the broader regulatory scrutiny it faces. While Epic Games pushes for reforms that would significantly alter Google's Play Store operations, Google warns of the potential repercussions on competition, consumer privacy, and security. Today's news paints a picture of a company at the intersection of innovation, legal challenges, and financial speculation. As Google navigates these waters, the implications for its future operations, market position, and influence on the tech ecosystem remain a subject of keen interest and speculation. MicroStrategy, the prominent business intelligence firm, made headlines today for a multitude of reasons, all orbiting around its innovative ventures into Bitcoin and its related technologies. The news centered around its ambitious project, MicroStrategy Orange, a pioneering step into decentralized identity solutions grounded in the Bitcoin blockchain. Additionally, the company's stock dynamics and market movements following Bitcoin's price fluctuations also drew considerable attention. MicroStrategy Orange represents a novel application of Bitcoin's blockchain technology, introducing a decentralized identity system that could potentially revolutionize how identities are verified online. This DID system aims to allow individuals to control and verify their identity without depending on a centralized authority, a significant pivot towards user sovereignty and privacy. The uses of such a system are vast and varied, spanning from combating social media bots and verifying documents to securing medical records. This move aligns MicroStrategy further with Bitcoin, leveraging the blockchain's immutable nature to offer a secure, globally accessible identity verification method. The introduction of this technology could have profound implications for social media platforms, where user verification is a persistent challenge, and in healthcare, where secure, unchangeable records are essential. Reaction to the announcement was mixed, especially on platforms like crypto Twitter, where the Bitcoin community dissected both the technical nuances and the broader implications of adding what some viewed as potentially bulky data to the Bitcoin network. Despite these discussions, the project represents a significant step in blockchain application development, pushing the boundaries of what's possible with Bitcoin and potentially setting a new standard for decentralized identity across the internet. On the financial side of MicroStrategy's news, the company's stock performance highlighted the volatile relationship between its valuation and Bitcoin's market price. After a sharp pullback in Bitcoin's value, MicroStrategy's stock followed suit, though this sparked debates about whether the resulting lower premium over its underlying Bitcoin holdings presented a buying opportunity. Given that MicroStrategy's strategic focus involves significant Bitcoin investments, the fluctuations in its stock price offer insights into the risks and rewards of such a crypto-centric business model. It's a tale of how deeply entrenched the fortunes of tech companies can become with cryptocurrencies, reflecting the broader market's evolving dynamics and sentiment towards digital assets. In summary, MicroStrategy stayed in the spotlight due to its ambitious foray into decentralized identity with MicroStrategy Orange, leveraging the Bitcoin blockchain to pioneer a secure, immutable ID system. This announcement, coupled with the financial news relating to its stock's reaction to Bitcoin's price movements, underscored the company's intertwined fate with Bitcoin. Whether viewed through a technological or financial lens, MicroStrategy's activities today encapsulate the ongoing fusion of traditional business strategies with the frontier world of cryptocurrencies, highlighting the continuous innovation and market sensitivities defining this space. Today, Block Inc., formerly known as Square, has taken the spotlight in the tech and financial markets, showcasing its remarkable performance in the first quarter. As we navigate through the intricate details of their financial health, strategic moves, and broader market reception, it's clear that there's much to unpack and even more to anticipate from this dynamic player in the fintech sphere. Starting off strong, Block reported a solid beat on both top and bottom lines for its first quarter, sending shares upwards and stirring positive chatter among analysts and investors alike. The company unveiled a gross profit of $2.9 billion and an EBITDA of $705 million, comfortably surpassing the street expectations. This performance highlight not only reflects Block's robust growth trajectory, but also underscores the efficacy of its strategic initiatives, particularly around Cash App and its foray into Bitcoin investment. Drilling down into the details, Cash App's growth narrative is particularly compelling, with inflows per active user experiencing a notable uptick. This metric, pivotal for understanding user engagement and platform monetization, evidenced an 11% growth year-over-year in the first quarter. The company attributes this surge to the increasing adoption of paycheck deposits, hinting at a successful effort towards driving direct deposit engagement. This factor is critical as it reflects Block's ongoing ambition to cement its position as a comprehensive financial services platform. On the cryptocurrency frontier, Block's strategic Bitcoin investments have paid off handsomely, with a reported 160% growth on their $220 million investment. This move not only amplifies Block's financial muscle, but also fortifies its commitment to integrating cryptocurrency as a core component of its ecosystem. The announcement of introducing a new 3-nanometer ASIC mining chip further cements Block's dedication to innovation and its bullish outlook on the future of digital currency. The company's upward revision of its 2024 gross profit growth from 15% to 16 to 17% signals a confident stance on its future performance. Furthermore, the ambitious integration of Afterpay into the Cash App card and the substantial investments into Bitcoin purchases reflect Block's proactive approach to leveraging emerging opportunities to fuel its growth engine. As Block reshapes the contours of financial technology with its innovative offerings and strategic investments, it's evident why the company remains a central figure in tech and financial news today. The combination of a solid Q1 performance, strategic Bitcoin investments, and optimistic future plans underscores Block's resilience and forward-thinking approach. With these developments at hand, what are your thoughts on Block's strategies and its aggressive push into the realm of cryptocurrency? Do you see Block's integration of financial services and crypto as the future of fintech? Leave your comments below, and let's dive into a discussion about the evolving landscape of financial technology inspired by Block's recent maneuvers. Let's zoom in on Apple. Given today's earnings report and the strategic directions outlined by the company, I would lean towards a buy recommendation on Apple's stock. Here's why. First off, Apple's fiscal second quarter results showcased resilience in a tough market, beating expectations with revenues of $90.8 billion. While it's true that iPhone sales saw a dip, this was largely anticipated due to the global tech slowdown and particular challenges in the Chinese market. Importantly, the decline in hardware sales is being effectively offset by the robust performance of Apple's services segment, which hit an all-time high of $23.9 billion in revenue, a clear indicator of the company's ability to diversify its income streams. More so, Apple announced a $110 billion buyback plan, along with a 4% increase in its quarterly dividend. This move screams confidence from Apple's board in the company's future profitability and growth potential. It's not only a boon for existing shareholders, but a green flag for potential investors about the financial health and optimistic outlook of the company. Furthermore, Apple's pivot towards artificial intelligence signifies a refreshing strategic shift that could open new revenue channels and keep the company competitive in the rapidly evolving tech landscape. CEO Tim Cook's hint at significant investments and future AI innovations could position Apple as a key player in this area, potentially leading to a new growth supercycle, complemented by its forthcoming iPhone models and services. However, there are considerations to be mindful of, such as the intensifying competition in crucial markets like China and the broader macroeconomic challenges affecting consumer spending on technology. But given Apple's history of navigating market downturns successfully and its continued emphasis on innovation and financial prudence, the upsides appear to substantially outweigh the risks. Buying Apple shares could be a strategically sound decision for those looking to invest in a company with a solid track record, a clear forward-looking strategy, and the financial muscle to back its ambitions. That said, remember, it's crucial to conduct your research. And that, folks, wraps up a whirlwind day in the tech sector. From Apple's strategic resilience and innovations to Google navigating legal headwinds with technological leaps, and MicroStrategy's daring dance with Bitcoin to Block's fintech advancements, today mirrored the dynamic, multifaceted universe of tech companies trading on the Nasdaq. Each narrative not only underscores current market trends, but also hints at the shape of things to come. Whether it's Apple banking on AI, Google pushing the envelope on user experience, or Block and MicroStrategy exploring the crypto frontier, today's stories stitch a vivid tapestry of innovation, challenges, and strategic maneuvers that keep the tech world spinning. Listeners, if you found today's summary insightful, don't forget to like, subscribe, and share the love with others. Your support fuels our drive to bring you the sharpest, most comprehensive tech news out there. Let's reconvene on Monday for another dive into the world of tech. Have a fantastic weekend, stay curious, and keep innovating. Cheers to the endless possibilities ahead.